The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you.
Welcome to Stock Take. My name's Gaurav. Joining me today is analyst Nick Cummings. Hey, Nick.
Morning, Gaurav.
And with us also is Graham Whitcomb. Hello, Graham.
Hey, Gaurav.
Gents, our first podcast for 2023. Now we have to settle the biggest question I think we're going to face all year, which is how late can you say Happy New Year and still be acceptable? I think February is too late. I think we've lost it. It's got to be in January, right?
No, first quarter of the year and you're okay.
First quarter? You can't do that, Graham. In March or April. No, surely not. Nick,
put some joy in people's lives, Gaurav.
You just confuse them.
Yeah, no, I think you've got about a fortnight afterwards.
A fortnight? Geez, you're straight. I think I'm down the middle between you two extremists. I reckon you get January.
Then we're back to Merry Christmas.
Yeah, that's it. I reckon you get January. But anyway, we probably won't settle that long debate today. What we can sort of think about is the looming reporting season, which is always an introduction to the financial year, I think, for us. And this year it's, I think, a bit perplexing. Both of you, I know, are looking at or have looked at retail stocks in the past. And this is an area which I find really interesting at the moment. I mean, these are notionally really, really cheap. Now, retailers, both kind of discretionary and even everything except the supermarkets are looking quite cheap. But the expectation is that these rising interest rates are going to crunch household and spending is going to fall off a cliff. And I think that's a reasonable expectation. But so far, we're not seeing it in the numbers. Graham, you wrote up Nick Scali's numbers, and I know the stock fell on the day, but I thought this was quite an extraordinary result. I thought this was much better than I would have expected. What do you think it tells us? Well, tell us a bit about the result, first of all, and then what do you think it tells us about the state of the consumer?
Well, it definitely tells us that people set share prices based on expectations, not what's happening already or what happened in the past. So this was a great result. The revenue is up more than 50%, net profit up 70%. I mean, if you had just gone through the numbers, it was one big tick after another and nothing but kind of upward pointing green arrows. But there's definitely things kind of bubbling through in the economy slowly that suggest that is probably the last great result you're going to get for a while from Nick Scali. So,
right.
Yeah, the main thing is that it's tied very closely to housing starts. And yeah, those numbers have just dropped 20% or more since this time last year. And that'll eventually filter through, because there's a delay in the length of time it takes to actually build a home, approvals from the beginning to completion might take a year or two. So if you're optimistic. And so that means that there's this kind of lag effect where you'll see what's going to happen to Nick Scali's result kind of ahead of time by watching what those approvals are doing. So we know that they've gone down kind of 20% now. So it'd be very, very surprising if revenue stays where it is.
And that would explain both the share price move and I guess the current multiples, which look extraordinarily cheap for a business of this quality, right? So there may not be a screaming opportunity there.
Yeah, it's only trading at kind of 10 or 11 times earnings at the moment. But I mean, they're going to go down quite a bit. So yeah, it's a bit of an illusion. You're probably looking at an underlying price earnings ratio of maybe 15 or so. But I mean, that's not terrible for a business that's, I mean, it's done great. But so far over the last kind of 5 years, it's grown from a pretty small business to a big one. But in terms of what's going to happen over the next 10 years, they really don't have that many levers to go to boost sales apart from rolling out stores. But that was kind of the main disappointment of this result, was that they hardly opened any stores and it didn't exactly sound optimistic of what was going to happen in the next year.
Nick, what areas are you looking forward to in reporting season? What do you think looks interesting? Throw us your 2 cents about where you think the consumer is headed as well.
Yeah, well, I think so far the market updates and the early results point to the consumer's still pretty strong. Those interest rate rises really haven't hit consumer balance sheets yet. But you are noticing a lot of the retailers and other businesses as well announcing good results, but mentioning that the outlook, that they're not sure on the outlook. There's not as much visibility as they've had in the past. And you are starting to see one or two companies that are reporting weaker results. One we've written up previously, ARB, profits were down 30% the other day in a market update, and revenue down as well. And obviously they benefit a lot from the pandemic, but that's starting to wind back. And I guess my hope for a lot of these companies, particularly ARB, that we think is a good quality company, is that demand does weaken a little bit and we can actually pick this company up on the cheap. But it's still well above 20 times earnings, and opportunity doesn't seem as large there yet.
Yeah, ditto with other building stocks. I think stocks that are economically sensitive, I'm surprised they haven't fallen more. So Reece and James Hardie, probably two I've got on my personal watch list. I'd love to own them both. And they're both, I think, there ought to be lower expectations in those businesses when you look at what's happening in their respective markets. And the prices just have not fallen anywhere close to what I think would be acceptable. I think we still need to see another 20, 30% fall in those share prices before I personally start to get interested. But the quality seems to be expensive still across the board.
Yeah. The same I noticed just recently with Transurban, where for the last decade, everyone's been pitching that as kind of an annuity style stock that's going to be measured against the bond yields. But the yield has almost tripled on bonds over the past 18 months. And yet Transurban is basically unchanged in its share price. So what happened to the to the interest rates go up and Transurban goes down? It seems like it's gone up as they went down, but doesn't want to do the inverse to that.
Yeah, I agree. In fact, I think the story on Transurban has completely flipped. Completely agree. That used to be a kind of a yield stock, a play on interest rates. And now it's become a inflation protection stock because, you got the CPI increases baked in. And now I think when you see this flip-flop of stories happening in markets, it's a real warning sign. And that particular business, if I could short a stock, I'd be tempted by that one. I think that the numbers look outrageous on that. I don't understand the price. I think the market's got that completely wrong.
I don't really get the whole inflation link either, because they've had a floor for inflation for ages anyway. So they're in terms of the inflation linked tolls, most of them had a floor of 4%. So they were already getting that. So if we assume inflation averages like 5 or 6%, unless you're really thinking something extreme, so that there's kind of a long tail hedge you could use it for. But as long as inflation isn't totally crazy, then you're only kind of getting an extra percentage point or two of growth. And yet that interest rate rise has clobbered its discounted cash flow valuation.
Yeah, I would have thought so. Like I said, I don't understand that price at all. From the stocks that I cover, I've noticed, and I don't know, Nick, if you've seen the same thing, but the US reporting season is sometimes illuminating and tells you a little bit what's going to happen here. So things I've been looking at are these cloud computing businesses in the US, and the numbers there have definitely slowed down. And I think this narrative of endless structural growth in cloud computing might be challenged. I think we might find that this is actually a more cyclical part of the market than we expect. And I think that has implications for NextDC and maybe Megaport and possibly Macquarie Telecom as well. I think all those three stocks, they might see weaker growth. And certainly NextDC, I think, is vulnerable to multiple contraction as well, because that thing is still expensive on multiples. I'd say Mac Telecom is not that expensive on multiples, and I don't think it had fully engaged in the cloud computing froth. But NextDC is probably one that I'm going to be watching very, very closely, because they've built a whole lot of capacity. They've got a whole bunch of debt, and if the contract went slow, I think that stock could potentially get cheap. And I still think it's a high quality business. I think that would be an opportunity. So that's one I'm going to be watching very closely. Nick, anything? I know you in your former life you used to follow international markets. Anything else you've noticed with this US reporting season that's relevant?
Yeah, absolutely. I think there's been a pretty large divergence. The cyclicals over there are actually reporting fairly decent numbers, whereas the main impact or the main earnings cuts have come from the technology names. Some of the names you alluded to, the big cloud computing players, Microsoft, Amazon, Google, and even Facebook. But a lot of the froth is now coming out of that technology market, but there's no doubt the revenue rates are slowing down dramatically. And the growth that investors were expecting only a year ago is not eventuating. Touching on the cloud computing particularly, I guess, revenue is slowing down, and there are other companies mentioning that they are reducing their cloud spending. And that is one of the, I guess, beauties of the model and why so many companies have adopted it, is it is on demand. So you can scale it up and scale it down. And so you're actually seeing these companies like Amazon and Microsoft who have built out the capacity, their margins are now coming down because they've built out the capacity, but it's just not getting used. Yeah. And so that's really impacting the share prices of those businesses. But for the most part, the US reporting season's been pretty good. It's just the technology area that's been hit.
Yeah.
With those kind of businesses, does it mean that if they're not using that capacity, is there kind of an obsolescence so quick of the technology that they're using that it's then just wasted? Or will they be able to kind of mop up that capacity with other, I don't know, in 5 years' time or something or other? Or have they just built too much and then they've got to rip it all up and put the new stuff in?
My understanding is that they won't rip it up. It's there and it can last a while once the capacity comes back. And data is still expected to expand dramatically over the next 10 years. So I doubt they'll rip it up, and it's definitely not obsolete, but they are slowing how much capacity they are bringing online. So you've already seen, I think Google in particular, cut their data center spending, and Amazon as well.
But for me, it's not really the technological obsolescence. It's just the very high expectations. And I think the story about data might prove to be the wrong story. This idea that there's endless amounts of growth and very high growth. I think we'll find that there's a lot of cyclicality. It's more cyclicality in that cloud computing data storage area than people previously believed. And I'm not sure that's in the price yet. I think that's going to come as a bit of a shock if that turns out to be the case, which is why I'd be cautious on some of these former darlings, and particularly something like NextDC, which has a huge amount of debt on the balance sheet. We recently downgraded the buy price on NextDC, and I'll be watching that result pretty closely. And I suspect that the buy price might come down a little bit further because the debt really increases the risk. And that's where I would say Mac Telecom has an advantage. But anything else, Graham? I know you're watching stuff over in Canada. Have you heard anything else?
Well, Credit Corp.
From the US? Oh, yes, that's
Credit Corp reported this week.
Yeah. Not that has much to do with Canada, but they are.
Well, they operate over here, so it's an interesting one because there's just so many different levers with it. Where for those of you, for anyone who doesn't know it, it's a debt collector, where it's buying already defaulted debt from the banks and then trying to squeeze a few extra pennies out of it. So it's an interesting case where when the economy starts to deteriorate, what you see is collections tend to dip because, well, even though the people have already defaulted, the possibility of getting anything more out of these debt ledgers is going down. But at the same time, the supply of the ledgers actually goes up because the banks are writing off more debt. So you get this interesting dynamic where Credit Corp needs to kind of survive the first down leg of the economy by maintaining its collections, but then at the same time kind of benefits over the longer term because it can purchase all these extra ledgers for cheaper than it could before. So at the moment, we're at a weird kind of transition where the economy is starting to slow down a bit. Collections dipped a little bit this half, but in Australia, it's still just extremely competitive for ledgers. The banks aren't writing off enough to match the demand by the collection agencies. In the US, it's not like that. Over there, there's tons of them kind of flooding out, and so there's plenty of capacity or plenty of supply that Credit Corp can then kind of make use of with its staff, and it's actually switching some Australian staff over to the US. But yeah, back at home, it's
just on that point, Graham. I thought there were two Australian competitors that went bust, right? What was it? Pioneer and what's the other big one?
Collection House.
Collection House. Yeah. So I would have thought it'd be much easier for them to get good prices on the Australian debt. Is there more competition than we think, or has it just been not enough bad debts popping up?
That's exactly right. Yeah, the banks just aren't writing it off fast enough. They're either holding on to the collections more themselves, or they're selling it at too high a price for Credit Corp to actually make use of. I have a feeling Credit Corp's always been a very responsible collector when it comes to purchasing these ledgers, in the sense that it seems to have stricter hurdles than, two of its competitors went bust, as you said, so they obviously didn't have very strict hurdles, but they tend to be much more careful with pricing the ledgers at the beginning when they're actually getting them from the banks. So I wonder whether the slowdown at the moment is more that they're pushing up their required hurdle rates in anticipation of the slowdown to try and get ahead of it, and that's what's caused the pullback.
I see. So there's a lot of discretion here, and it's really hard to know whether that's sensible conservatism or them just not doing their job properly. You know, we only get an answer to that question years down the track. So you're saying that they're just showing a lot of conservatism right now in actually buying the ledgers. I suspect this is exactly the right time in the cycle to probably show that sort of conservatism.
Yeah, I agree. I think they're doing the right thing now. It was I think the trouble with it, though, is that they kind of packed on a little bit of extra debt over the past year in terms of corporate debt. That's the irony, is that they're in the debt business, but you don't want the actual business itself to be holding debt that it then has to pay back. So they've increased. They used to have a net cash position for ages, but that seems to have changed over the past couple of years as they were purchasing the ledgers from Collection House when it went bust, or then expanding its US division. So now the company has a bit too much corporate debt, I think. And management has said they're going to slow down that and start to repay it over the next 6 months to reduce it. So I hope that goes through, because it's coming at the right time.
The psychology here is interesting, right? This is a company that spends its days dealing or mopping up with the consequences of too much debt, and you hope they learn a lesson for that after seeing it every single day. And they had a blow up a few years ago, right? Well, not a few, maybe 10, 15 years ago, they had a big blow up, didn't they?
Yeah, I think the companies, they get obsessed with debt, and because you can buy it so cheap, I mean, they're buying these written off loans for cents on the dollar, basically. Yeah. And it's just very tempting when you see the collection start to increase that you then want to dive in and buy in even more. And the way to do that is to take on debt of your own. But yeah, it's the survivor who ultimately earns the good returns, not whoever's earning the highest in the short term.
I imagine the incentive package for management is just super important to get across, because if they're incentivized to take on more business or expand the balance sheet, then they're probably going to take on extra risk. I think this is the kind of business where when you say no, it's really important to see when management says no or declines business. It's super important.
Yeah, definitely. That's the number one thing.
Is there a risk, Graham, that recently that the consumer's been just too strong and the banks haven't been selling these books off because the losses haven't been as high as they previously have been?
Yeah, I think so. The issue through the pandemic was that a lot of the people who would have fallen into financial distress didn't, because the government kind of supported everyone with the cash handouts. So I think that did lead to a lack of ledgers during the past kind of year or so. Credit Corp is pretty lucky that it was able to pick up those failed competitors' books, because otherwise its purchasing would have shrunk over that period. But yeah, it'll depend a lot on how the economy does now, and particularly unemployment rates, that'll eventually feed through into more, write-offs at the banks, and then that'll feed through until we get to better pricing for the actual ledgers. It really comes down to that supply and demand for the ledgers. The actual collections is a pretty standard process. It's and also relatively consistent. There isn't, I mean, apart from huge blow-ups like during the financial crisis or something, the collections are pretty predictable. Credit Corp can actually, it amazes me how predictable they are. Credit Corp can predict a ledger's return like within a couple of percent.
Wow.
Which is
amazing.
kind of crazy. So I guess when they're dealing en masse with thousands and thousands and thousands of defaulted loans, it becomes predictable, even if you can't predict any one individual's response. But yeah, I mean, it ultimately comes down to the pricing at the beginning, not the collections.
That phenomenon has always shocked me. You can meet an individual, and sure, every individual is different, and sometimes you get surprised when you meet someone quirky, but it shocks me how much when you aggregate people together, how predictable mass behavior is and how common and unsurprising it is. It always surprises me. Like, you see it time and time again, and it seems to be consistent all over the world. I don't know whether to be depressed by that, actually. I think that's very worrying that, taken together, our behavior is so easy to see and easy to predict. I'm sure that's how the AI will get us in the end.
Well, I guess
maybe.
The insurance industry kind of relies on it.
Yeah, that's right. They probably have such good insights there. Yeah. Hey, can you?
I was reading recently about the car insurers who are using. They're buying data based on what browser you use and this kind of thing, your internet usage, and then they feed that into their pricing models and this kind of thing. That whether you use Chrome or Safari en masse is predictable of whether you're going to have a crash or whether you're going to make a claim or this kind of thing. I'd love to know who the risky customers are.
That is astonishing. Yeah. Well, what's that big hedge fund, that quantitative hedge fund that has performed 60% a year for 30 years? What's
Renaissance?
it called? Renaissance. Yeah,
that's it.
So their algorithms are famously opaque. And then for those who don't know, this is a hedge fund that has generated 60% returns over 20 or 30 years. That's an annual return for 20 or 30 years. I mean, you think Buffett's done less than half of that and is hailed as the greatest investor of all time. I think the guys at Renaissance will have something to say about that. But they go around and they hire PhDs, Nobel Prize winners, only the smartest people in every field. So they might have like a chemical engineer or a physicist or an astronomer or something like that. And they put these people together and they come up with these really esoteric algorithms. And no one knows exactly what they are, but the rumors that I've read, and there's a great book about this, The Man Who Knew Too Much, I think it's called. The rumors are that they make these really outrageous connections between data points, and their regression models are just insanely large. So I think we're late to the party on this. I think if we had figured this out about human behavior 20 years ago, we could have been billionaires by now, boys. We missed it.
Wasn't the rumor that one of them was, if it was sunny in Paris, that the S&P 500 was more likely to open up or down? I forget which direction, but that wouldn't
surprise me. That's the kind of stuff I've heard as well. Like, it's complete. It sounds complete nonsense, but then you look at their returns, and it's very difficult to laugh that off, right? Of course,
I guess if enough people don't believe something, then they might be able to just squeeze out these tiny little differences. So if nobody is following what's happening in Paris with the weather in Paris to decide on pricing in America, then maybe they can find an edge of 0.1% or something and work with that. It's probably much less than that, I'm guessing.
I'm convinced that any good idea now, especially when it comes to investing or finance related, any good idea has to sound crazy, outrageous, and stupid. Otherwise, someone would have done it already. And
I did like that article you did last year of like the I can't remember what it was called, the crazy portfolio or something.
Oh yeah, the crazy portfolio. I should go back and see how that's done. One of the companies in that crazy portfolio has announced, that was Ike GPS, and that was a stunning result. I was really, really impressed with that. That might be it's still too small for us to cover, but I've been really impressed with how that business has progressed. I don't know if you've ever looked at that, Nick, in your old world, but that's an interesting little business there.
Yeah, no, I haven't looked at it as in depth as yourself, but I did see that market update just from the headline numbers. It looks like it's going gangbusters.
Yeah, it's still a small business, but don't worry. Once it triples, we'll be able to cover it, and then we can we can bring it into the coverage.
Who's the crazy one now?
Well, I think for a business like that, there's still a long way to go. Even if it does triple, I still think the runway is so big. If it's working, you have plenty of time to buy it and do very well if it works, and you sort of save yourself the headache of losses if it's not working. I think it's sometimes a sensible idea. I mean, the discipline imposed by having to maintain a certain market cap on our coverage list, that's usually a good thing. It usually saves us from blow-ups and mistakes, I feel. Although this one might be an exception. Graham, listen, I've been trying to get some information on the American expansion, because I think this is the last point we'll do on Credit Corp, by the way, and then we'll move on. But I understand that, this is where the growth will come from. This is where the future of the business is, right? And I'm surprised that that Credit Corp isn't more of a darling, because the opportunity in the US just looks extraordinary to me. It seems like the structure of the market is not as tied up as it is here. These guys know exactly what they're doing. They've done it for a long time, and they're setting up quite patiently, and they seem to be doing well over there. Is that your impression as well?
Yeah, it does seem that they're doing well, and they've grown pretty well and pretty steadily. It's funny, I remember covering their initial plans to expand like 8 years ago or so, and just seeing it was never some sort of dramatic push. They could have very easily gone in, been aggressive with pricing, like I mentioned earlier, and taken a huge chunk of market share very easily. But they didn't do that. They've spent the last kind of 8 years pacing themselves, gathering banks to work with to have better relationships or better forward flow agreements or whatever. And they've just been building that up slowly, but on a more solid base. And from what I can tell, that seems to be working. It is a much larger market than here. It's more favorable in some ways as well than Australia. It's got a much more established kind of legal framework for collections, so they can pursue court cases much more easily over there to get collections out of people, though that ultimately feeds back to different pricing on the ledgers as well, so it kind of can even out. But from what I can gather, it's a pretty favorable environment for debt collectors.
Yeah, it looks like an interesting opportunity. And just remind us, what's actually, no, we won't discuss that because this podcast is free, but I was going to ask you to break on that, but maybe we'll save the record details for subscribers. Nick, let's leave Credit Corp for a second. I wanted to ask you about, I think overnight, I read that Google launched their AI product, and I don't know if you saw what happened, but apparently there's some sort of disaster as they were launching it, and the stock prices, I think it was down 7-8% this morning, and this has become a real battleground AI generation, and it seems to be between Microsoft and Google. Now, obviously, this has all been set up by ChatGPT. Tell us, what is the impact of ChatGPT on Google? We often talk about Google. I think internally, well, for me anyway, Google is the benchmark that you measure other ideas by. You know, if I'm looking at a stock and I want to sense check it, I'll just compare. I'll say, well, I can buy Google for 16 times, or I can buy this business, and that's kind of my sense check. But I don't know if that's still relevant anymore. Should I still be sense checking stuff with Google? Is that still the default go-to best stock, or is the empire about to crumble?
I mean, it's impossible to say, but
go on, say it.
And give us a date.
yeah, exactly. No, well, ChatGPT definitely, which for everyone that doesn't know is Microsoft's back, but there's a consortium of other investors as well. AI tool that's now free to use, so you can type that into your Google search engine, I guess, and find it.
That's right.
But yeah, it can do all sorts of cool things. So it can, I was testing it the other day, write a devotional poem to a politician or write this play in a serious play in a comedic style. And it does all this instantly. So it's quite a powerful tool. And obviously it can complete a lot of the mundane search functions as well. There is some limitations to this product, but it's anticipated it'll get a lot better. Like the information is only up to date till 2021. Still, a lot of people use search to actually find advertising. And what I mean by that is if you're looking for a restaurant to go out to dinner for, if you're looking for a hotel to travel to, this probably isn't the product for you. But if you're just looking for factual answers, it does quite a good job. The reason I think, there's a few reasons I think Google was down 8% last night, but one of them was Google had recently promised to release their own version, which I guess if you're a Google bull, everyone thought that their version will be just far superior than this version. I must admit,
I did think that as well. Yeah.
And then it pretty much failed when they did this live event. And then it apparently, I haven't not across all the details, but it also released the wrong information live. So it was pretty much a disaster, definitely a PR disaster. And Google's got to be careful because, and they've mentioned this before as well, ChatGPT as the startup can afford mistakes because it's a new product. Google's got a lot of reputational risk if they start releasing a poorer product with the wrong answers. I think the big threat going forward for Google is, and you can see this with the Microsoft share price as well, Google's share price is dropping, but Microsoft's isn't rising. So what I think it means is, or what the market's expecting, that this is a threat to the overall pie of search advertising. Not that Microsoft is going to win maybe a lot more share of advertising so much, but the pie is going to shrink because if you're using ChatGPT or Google's own version, a chat product, instead of searching, you're seeing less ads. You're also scrolling. You're not scrolling through the feed, which would show you more ads as well. So the ad load will be significantly less. Now, I think we previously mentioned that people have used this product or Google for 20 years. So there's going to be a lot of resistance to move over. And it seems to be the only people that have so far using ChatGPT are mainly professionals. It's not really used for typical search functions. Yet people are just sort of playing on it rather than using it day to day. But
now, Nick, are you suggesting that there's not a good use of poetry written in the style of Tony Soprano or something like that?
Not yet, anyway. I guess for some people it probably is, but there are definitely limitations. But it's one of the biggest threats to the Google search monopoly that's happened in pretty much since Bing tried to put all their resources to try and overtake it, probably over a decade ago.
Yeah, no, this is fascinating. This has become one of my new favorite battles to watch. And this Google versus, not even, I think that you raise a good point there. It's not really Google versus Microsoft. It's really existing search versus kind of AI, the new AI.
Yeah. And I think it's Google versus itself, as in like Google may have to cannibalize its own ad revenues to keep market share. To keep search market share or minutes per viewer or however you define it. I think that's the risk.
That's so fascinating. It'll be interesting to see how they respond to that, because this is a company that it's tried very hard. It's almost $1 trillion business. It's tried really hard to maintain a startup culture and to maintain disruption. And now here's the test, right? Will they disrupt themselves to catch this new market?
Yeah, just a final point too, I guess, on all of that. Microsoft is the one company you probably don't want to be competing with in this space. And the reason why is, and they're already starting to do this, but they're introducing the product through Microsoft Office. So as also like a side window on Microsoft Word or Excel, and it can really, accelerate adoption. but also, I guess people can be just far more accustomed to using it far quicker than most other companies.
Yeah. No,
I would think that there is still probably a risk for Microsoft or OpenAI where, because it's still early, the product isn't going to be perfect yet, and people might lose faith in that initial kind of adopter of it. Like, I know that I've tried stuff with it and it's just come up with completely rubbish answers. And so if people try it out on Microsoft, they then think, well, they then find that it doesn't work. Then they just go back to Google and they become permanent Google people again. Then maybe there's a disadvantage to being the first mover in this kind of industry. You want to get the answer right, not just be the first to market. I also watched an interesting interview yesterday with Satya Nadella, the CEO of Microsoft, and he had this one stat which had just stayed in my mind. And he said that Google makes more from he said that search is the most profitable business in the world, and that's why they're going to go crazy to try and get into, to try and do whatever they can to break Google's monopoly on it. But he said that Google makes more money from search on Microsoft machines than all of Microsoft.
That's extraordinary. Wow.
It just, and so that's where I'm kind of an optimist on Google. I don't know how it's going to work out with the OpenAI, but here we have the most profitable, like the biggest money-making machine in history, basically. And it's got a complete monopoly in the most profitable industry in the world right now. And we're just kind of, people are selling it and panicking because of what might disrupt that. And maybe it does disrupt it. But I don't know, I wouldn't bet against it just yet.
Microsoft is, I must say, for me personally, it's a business I absolutely loathe. Because they've never once in how many years, that started in the 80s, maybe for 40 years, they've never made a decent product. Excel, I'll give them. Okay, Excel is a good product. Word is a ripoff of WordPerfect. And they've never done anything good. Anything they try from scratch is a disaster. And I just think that the sprawling empire, like they've just bought bits and pieces, which I don't quite get. They're trying to buy this big gaming business now. It's a company that's I think that's acted stupidly for decades and been saved by its core monopoly. And that core monopoly is really powerful. But I'm not sure I'd back Microsoft on this. I think they're very good at that core Office and 360. I think that's an amazing product. They've done well on cloud. They've got the best corporate distribution channel. I think Google can't compete with the Microsoft sales that they have with all their experience selling corporate gear. But we're using Zoom right now when we typically use Teams, and it's rubbish. Every product Microsoft ever has released has been rubbish. Their phones, their tablets, their laptops, any piece of software with Microsoft on it is rubbish. Okay, there's few companies I loathe as much as Microsoft, but
I kind of liked their phones. They just didn't have any apps on it.
And not that this is an Apple fanboy talking here, but Apple did $100 billion in their quarterly revenue. I just throw that out there. So I think the iPhone still is probably the most profitable business ever. Yeah. And it's hard to see that changing, but I'll throw that out there. Hey, just one quick story that came to mind for me was this Google demonstration they did. Look, it's kind of funny that it failed, but I remember reading that when Steve Jobs got up to demonstrate the original iPhone in 2007, it wasn't working backstage, right? The engineers told him, like, we're not sure this thing's going to work. And he got up there all ballsy and got the phone out. And there was this moment where the phone may not have worked. Like, it was just a 50-50. It was just a dead gamble that maybe would have worked, maybe it wouldn't have worked. And just the world could have looked much more different if Jobs had got up on that stage and the phone didn't work. And we all know what happened. Of course it did. And this is an amazing product, an amazing business. But I just keep that in mind, that there's a lot of luck involved in these businesses, and not all of them are by design. So I'm willing to give Google a bit of benefit here. I think it's still an amazing business. I probably would back them to create something amazing to challenge ChatGPT.
And it could be similarities just on that story. I mean, the iPhone was second to BlackBerry, but it was just a better product.
That's a good point.
Google was, I don't know, fourth, fifth, or sixth to Yahoo and a bunch of other search engines.
You're right.
So there's no, you don't have to be first. It's not, it's not a prerequisite to being the winner. It was just disappointing last night after.
For sure.
Yeah.
You feel for it. Well, absolutely. Yeah. All right, gents. Anything else you want to cover, gentlemen? I think we've probably been rambling for long enough, and reporting season hasn't gotten really in full swing, but it ought to fairly soon. So you see more reporting content on the site as these companies get into gear. But
it'll be flooding from me next week.
Yeah, no, for you, you'll probably, I think the way it works is the better quality business tend to perform first. So I always end up with the late reporters. I don't know how that's happened. How do I end up covering all the crap stuff, and you guys
actually, I wonder if you're onto something there. Where they all have that deadline of whatever it is, something late February. Maybe the ones who are kind of a bit more organized, they get their reports out early. The others leave it to the last minute and do an all-nighter.
I noticed this actually from our office dynamic, that you and JC, you and JC in particular, you guys have the better quality businesses. Like, you guys are always busy at the beginning of the month, and I'm kind of not doing very much. And towards the end of the month, you guys are a bit settling down, and I'm ramping up towards the end of the month because I've got the crappy ones.
Maybe we could create a artificial intelligence like Renaissance like other algorithm to.
There's something there. There is definitely something there.
We should have done a live demonstration of that right now and asked like, what will be the worst performing company this reporting season or something. See if it gets it right.
I haven't actually gone around. I've seen lots of videos and heard stories of this ChatGPT news. I haven't really used it myself. The other thing we should keep in mind, this is the third iteration. Like, this thing is amazing for something that's only very, very new. I think it's going to get a lot. It probably is going to get a lot better. Not just this particular software, but the whole AI chain is probably going to get a lot bit better.
And the image generator is impressive too. I've seen some images come out of that, and I'm blown away. I think I've been seeing these different houses that are designed in these different styles, and I think, boy, what use is there an architect anymore when this thing can create these beautiful houses from scratch?
No, it's astonishing, isn't it? I agree. The image AI is, if anything, sometimes even more impressive. And it really shocks me because, for the last 30 years, I feel as though we've been told, and I don't know if you guys agree, but we've been told that we all knew AI was coming, but we've been told that AI can't paint you a painting. It can't write you a poem. Can't tell you a story.
It doesn't do the creative stuff.
It can do all of that. It can do all of that in Tony Soprano's voice or in punk rock.
It can definitely paint better than I can.
That's the big shock. I mean, the fact that we have AI doesn't shock me, but the fact that it's doing things that we were always told robots could never do. I think that's probably why everyone's a bit scared about it. I think most big tech advances are greeted with lots of euphoria and happiness, and maybe just the circles I hang out with. But this one, there's a lot of trepidation, worry, and concern. Maybe that's because we've all seen too much Terminator. Now, you speaking of Terminate, I think we ought to jump off, and we've rambled long enough. So, Graham, thank you for joining us this morning or evening, I think it is for you.
Thanks, Gaurav.
And Nick, thanks very much for taking time from your bar fridge experience and
I wish
and joining us. Yes. For everyone else, thanks for listening.